discussion here about the media stocks. Joining us is Tuna Amobi. He's entertainment equity analyst with Standard & Poor's. Tuna, good to see you. Boy, you hear all those negatives that Julia was talking about. Is there any reason to buy media stocks right here?
Well, right now, there's really not much reason to be excited about the industry. I think Julia hit all the right notes. You have the concerns with the economic slowdown, as you saw this morning's consumer confidence tumbling to 16-year low. So that's obviously a concern in the minds of investors. The outlook for advertising has been generally mixed, and right now, beyond companies that are relatively diversified, we are very negative on those that rely predominantly on advertising, such as CBS.
But Tuna, can you just put it in perspective for us? Where are we for the media stocks? Is the worst behind the stocks? Because just today, Thomson, for instance, lowered their earnings forecast for the second quarter for consumer discretionary media stocks, of course, fall into that category, and they cite a deteriorating outlook.
Well, actually, you have to put that in perspective, because right now, all of our four major media indices are down year to date, and this is coming off very significant declines in 2007. I think if you look back to 2006 and perhaps in early 2007, there was this, euphoria, if you will, the private equity boom, which really, supported the valuations, and investors kind of lost sight of the fundamentals. So right now it's really back to basics, if you will. Regarding where we might be in the cycle, I really think that the outlook for 2008 is
And you really like Disney, right? That's your strong buy, the one strong buy in the sector. Why?
That's correct. Well, Disney seems to be somewhat resilient, as we've seen time and again. The theme parks have held up relatively well. Attendance and guest spending at the domestic park seems to be holding up. And in addition to that, Disney has some what you might call steady as she goes businesses, ESPN, regular stream of advertising affiliate revenues. So we like that as well. So overall, we think Disney is really poised to continue to outperform in a very difficult
Julia, is that
market.
what you're hearing from other analysts when it comes to this sector?
Yeah, it really seems like, and even you talk to the fast money guys, they all seem fairly bullish on Disney. The thing about Disney is that it hasn't shown the impact from the economic downturn yet. I spoke with Bob Iger last week, and we were asking if there was any indication that we were seeing a slowdown in the parks. And they were saying, based on their numbers as of yet, they don't give projections. It's seeming very strong. So the question is whether a weak dollar can help drive international visitors, and looking at sort of those factors, if people in the States are indeed traveling, maybe flying less, is that Disneyland or Disney World experience still worth their time? So it's really interesting to look at how the weak dollar is helping both internationally in terms of the parks, but also looking at all the movie studios internationally. Sort of movie theater box office overseas is an increasing part of that. So that's something we have to keep in mind as well.
Tuna, we showed viewers out there your buys, but what is a media stock you'd stay away from?
Well, I would stay away from CBS, as I said, primarily due to the advertising exposure. We are also very negative, across the entire cable sector. If you look at the first quarter results, I think you could argue that they really showed some rebound, but I doubt if this kind of momentum is going to continue, particularly given the continued difficulties in the housing sector. So really, we're very negative on this sector overall, except perhaps for Time Warner Cable, which is also a strong buy recommendation in our view, partly because of the catalyst that we expect from the separation from the parent company, as well as the integration of Adelphia. So overall, we're otherwise negative on Comcast and Cablevision and all the other players.
Right, let's be clear about that. You like Time Warner Cable, TWC. You do not like Time Warner, which is TWX.
Well, Time Warner, we're neutral on.
Okay, gotcha. Thank you, Tuna. Good to see you, Julia. We appreciate it.
Thank you.
Every quarter, Russell Investments